Welcome to episode 16 of the Veranda Financing Podcast. I'm Christine Mills. Today I'm going to discuss the various forms of financing that's available to your small business. Number one, bootstrapping. Depending on the type of business you're building, bootstrapping your business is a viable option. This is typical of the beginning stages of most businesses when you use your personal savings, credit cards, and readjusting your budget to make room for your new business. The second one is crowdfunding. Crowdfunding is a practice of funding a project or venture by raising many small amounts of money from a large number of people. This is typically done to help bring your products or services to the marketplace. Examples of this is Kickstarter and Indiegogo. You might ask, why would someone, like a stranger nonetheless, provide money to launch your product? Well, there are several reasons. One, lots of individuals like the idea of being part of a groundbreaking, innovative project. Secondly, others enjoy the ability of knowing about products before it becomes mainstream. They kind of feel like they're in some underground movement. Thirdly, there are others who are just simply like the philanthropic side of these platforms, and that they had a direct hand in helping someone's businesses come alive. I'll give you an example. Say, for instance, Anika wants to start an African basket company where she goes to various West African countries and gets baskets that she'll like to sell. She knows that it's going to be about a $10,000 investment. She might start her company on Kickstarter and describe her company, probably provide pictures of her products that she'll like to sell. She'll get a lot of people to buy into it by probably donating $10 or $20 to help her get her initial investment to buy her baskets to bring into a marketplace. With each level or tier that people invest in, she'll provide them with a gift of some sort to say thank you. That's a classic example of how you could use crowdfunding, and you can use it in many different industries. I've seen people use it for bamboo bicycles that they like to bring into marketplace, technology. So depending on the industry you're in, this might be a really good option for you. And what I like about crowdfunding, it allows you to build your customer base before you're even in the marketplace, because you get people talking about your product and they're pretty excited and looking forward to it being in the marketplace and telling others about it. So it's a great way to get feedback, build capital, and also build customer base at the same time. And also it's a debt-free option, which I really love. It really reduces the risk for entrepreneurs. Number three is factoring. Factoring occurs when you are in certain industries such as distributors, construction, retail, employment, staffing industries, or any other industry that requires a company to wait for their receivables. Receivables is really just a way of saying you're waiting for someone to pay their bills to you. For example, Monique owns a vintage-inspired clothing company that she has successfully run for the past 5 years. Over the years, she has developed key relationships with various retail shops, ranging from local boutiques in her town to Nordstrom's and Macy's. However, she doesn't get her money from these companies until 90 days later. The problem is that she has to pay her suppliers, rent, payroll, and other expenses every single month. She really needs this money before the 90-day period, but she doesn't have that much say because she's actually a small company. So she may approach a factoring company that is willing to buy her receivables and give her the money in advance. So they might purchase like 80% of your receivables and then hold back 20% once they get their money back from the companies in 90 days. This is a very popular option for lots of companies, like I said earlier, retail sector, where you really need that cash to operate your business. And while you're waiting on that cash, a company will pick up the tab, especially if you have strong customers, and they will have those customers, like in this example, Nordstrom's or Macy's, pay them. And then when they get all of their money, they'll give you the remaining of that 20% or 10% that they're holding back. Number 4, leasing. Leasing is ideal for customers or companies that require equipment. Think construction equipment, trucks, trailers, print presses, health clubs. Leasing allows payments to be low. The leaser can get tax benefits and be able to get new equipment more quickly than if they were purchasing it. Plus, leasing is a faster way to gain access to capital since it's such a quick turnaround and less paperwork. An example may be someone who has a construction equipment rental business. They may be investing in scissor lifts, and rather than pay for it out front, they may decide to lease it and get so they can have new equipment that they could pretty much update every 4 to 5 years. But they may not have a lot of money to invest in, buying it outright. So they might lease it and have lower payments per month. It's just like a car. Like if you're leasing a car, it'll be a cheaper, investment than if you're actually buying it. So there's really no down payment. Your monthly payments are lower. And at the end of it, you could go and buy a new fleet of scissor lifts, like in this example. Number 5, Small Business Association loans, SBA financing. SBA financing is a way for the government to ensure that there are small businesses gaining access to capital. The SBA will guarantee a portion of the loan to give banks incentives to lend the money to these small businesses. However, the interest rates are usually very reasonable, like 5%. But SBA financing can take some time. Unlike leasing, where you can apply for a lease and probably within a week you can get your funds. SBA loans take a little bit longer. Think the government. They have to find a lender that will lend to you. Now you're talking about small business loan from community banks. The process could be a month or more. But the interest rate's very reasonable, and at times they may even forgive the loan if you are serving an underserved community, such as CRA funding, Community Reinvestment Act. I will go into that further in future podcasts, but it's something to look into. SBA financing, I think, is a really great way to grow your business, low interest rate. And especially for companies that are minority owned, companies that may be catering to communities that are underserved as well. Lastly, I would like to talk to you about investors. Investors, if you're willing to give up some of your ownership, might be a really great way to grow your business. You can sell your equity ownership or portions of your company to gain capital. So some of us were like, I want to own 100% of my company, 100% of my company. I don't want to give anybody any portion of my company. I want to own it 100%. I hear you. I get it. But sometimes just selling 5% or 10% of your company could go a long way, especially when you don't have to worry about debt payments, worry about interest payments, worry about all those other things. And some investors, they literally just want just 5%, 10% of your company, and they might want dividends or a portion of your earnings at the end of the year. And some investors, as long as you're making money, they really don't bother you. They just silently give you their money and they make a return on it and you call it a day. You might ask, where do I get these investors? Well, I always say to start with your circle. Start with your family and friends. After you tap out that resource, you can approach accountants. Accountants are such a valuable resource because they just know a lot of people. They know high net worth individuals who are looking to make a return on their investment. They know companies that might be looking to expand, and they might be interested in making private investments. So build a relationship with local accountants. They are a wealth of resource. And then also you could also tap into angel investors. So there are angel investors. Angel investors are pretty much high net worth individuals who are looking to invest in companies. And Usually there are local angel investor chapters in your community, and you can reach out to them and they will tell you what types of businesses they like to invest in. Another form of investors are private equity firms, and that is a little bit more strenuous, I could say, because they are looking for a certain type of industry, and I think sometimes they come with their own issues, whether good or bad. They might have a lot more control over your company. They tend to like companies that are growing rapidly to make it worthwhile. So if you have a family-owned business and you want to grow organically, a private equity firm might not be your best bet. So you have to govern yourself accordingly. Check out this list. I am going to post it on my website, Veranda Financing. And you could, think about it. Think about where you are. You might be in the bootstrapping stage where, you're might be cutting back on your clothing budget to build your business. You might be in the crowdfunding stage where you're like, I have a really great product that I've been tinkering around and I'm going to go on Kickstarter or Indiegogo and see the response. You might be in the factoring stage where, you have such a good business and you have great clients, you have great receivables, but you need cash. And in that case, you might want to approach a factoring company. Or you might be in a leasing stage. You might want to say, I really want to start an equipment rental business, or I want to start a local gym, and I need equipment. In that case, you might want to lease. You might be in the SBA financing stage where, you may have your company for a number of years, or you might be starting a company from scratch. That might be a viable option for you. Or you might be in the investor stage where you have been doing it on your own, but you just need that boost to take you to that next revenue scale. The investor stage might be right for you. Whatever the case, it's your decision and you have to know what will make your business go to the next level. But we're here for you at Veranda Financing. If you have any questions, you can visit verandafinancing.com for more information. I'm on Instagram and you can give me a call. I will answer your questions. I'll be glad to help you out in any way, shape, or form. Again, thanks for tuning in. It was a pleasure talking about all things finance related because I know it's so key to growing small businesses. Again, if you like this episode, please subscribe to Veranda Financing episodes and you can learn more and more about ways to grow your businesses. And I look forward to talking to you in the future and discussing ways to grow your small business to the highest level that it can be. Take care and God bless. Bye.